Hello, traders. It's 8:01 a.m. Chicago time on April 24th, 2020. Happy Friday to everybody. It's another week done with, the last full week of April 2020. Thanks for joining me today. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance not necessarily indicative of future results. This morning, the market is taking a little pop higher on the risk side, with equities pushing higher, except for the DAX. DAX is the laggard today, down 64 points or 0.6%. 0.6%. All the other risk assets are pushing higher. The S&P leading the pack as far as the indices, up 25.75 points or 0.94%. Crude is taking another pop higher after testing a key level yesterday, 1774, trading at 1722, currently up 72 cents or 4.36%. That's where we stand. Both the DAX and the Euro stocks are down. Europe seeing some outcomes that were negative yesterday. What was released overnight? The key figure that was released overnight was the IFO business climate out of Germany, came in at 74.3. The prior's 85.9 revised, 85.9 revised. The forecast is 80. And durable goods orders came out of the U.S. at 7:30 about a half hour ago, 7:30 my time, Chicago time, 8:30 Eastern. Came in at negative 14.4. The prior was plus 1.2, big swing down, but the forecast was for negative 12. For the rest of the session, we have Michigan sentiment, but it's the final number, usually not a mover. That comes out at 10, and then that's it for scheduled releases. Next week has the Fed rate decision on Wednesday, the 29th. Keep an eye on that. Mark that on your calendar, and so on and so forth. Expected to be a big mover. That same day on Wednesday, we're getting GDP. So take a look. GDP prior was 2.1%, which is quite standard, quite average, I should say. The forecast for GDP in the U.S. is for negative 4.6. Next Wednesday is a big day, big day, big day. So make sure you mark it. And that's where we stand in terms of what's scheduled. Let's take a look at what was expected yesterday. Oh, by the way, it's the last Friday of the month. The last Friday of the month. What do we do on the last Friday of the month? I ask everyone, whether you're on Periscope or YouTube, please type in your location. Where are you hailing from? If you like, the city, state, or province, country. Please post that. The reason we post that, I'd like to post that, is just to see how far around the planet we're reaching, and to again remind everyone how close we truly are through the technology we've created as a race. So please type in, whether it's in Periscope, or if you can't type into Periscope, please put it on my Twitter feed. Hopefully you can find someone near you and you can connect. This is very important. I know a lot of people who are from Chicago, Toronto, a lot of people in the San Diego, LA area, San Francisco, and a lot of people in London, Singapore. We have people hailing from Brazil, from Israel, from Lebanon, the Arab Emirates, and Thailand, and so on. It's a vast world, and we're bringing everybody together here every day with about 2,000 unique views on the Trader Bite daily. So please do that. I love to see this. I grew up internationally, and this really is gratifying to see. So hopefully you can all connect. You can see each other on live chat. If you see someone nearby, tag them and see if you can connect with them. I love connecting traders. Anyway, so here's what I expected yesterday. Yesterday, the primary expectation is we are opening on the upper end of Wednesday's range, the expectation is we would bounce around in that 27.95, 2800 area, and then I was looking for it to push higher into 35.75. 35.75, as you see here, I wrote 28.34. Remember this number. And then if it fails, which is scenario 2, then look for it to push into 28.15. 28.15, this maroon line here, this naked point of control, and I was looking for it to roll over and push into 27.89.50. Remember that. And then the big area below is 27.75, as you already know for this whole week. 27.75 has been key. So remember, 28.34 up above. Below, we're looking for 27.89, 27.75. I didn't mention it, but it's an area I've talked about all week. Here's what actually happened. Oh, I changed this Renko chart yesterday for our study hall. Convergent didn't convert it back, so this is going to be a little bit squished. Bear with me here. I can't expand it more than this. So initially, it pushes through the 15. There's the 15, and then it pulls back through the mid. So we have basically a drive on the open, and we have this impulsive move on the open. In fact, I want to show you this, and I'm going to do that by scrolling back so you can see how this thing played out. And the reason I'm doing this morning is, and by the way, thank you to everybody who posted their location. Really appreciate that. The reason I do this is because I want to show you on a daily basis, on a repetitive basis, I want to show you that just having a plan, even if it doesn't work out, more often than not, things do kind of work out if we do the homework. If we do the homework, okay? And so, when you see this every day, this is why we do this review segment, so that I'm not telling you, hey, yeah, I expect the S&P to open and it's likely to go up and it's likely to go down, and then the next day send you another newsletter telling you, oh, I was wrong about it going up and down or down. It's we're talking specific levels based on homework here done day to day. And I'm not doing that to congratulate myself. I'm doing this to show you that if you did this work, you have a better opportunity. You have a better opportunity of following your plan. So here's the 28.35, the 28.35. So we push through the 15, looks very strong, pulls back, goes into the mid after an impulse up. This is a setup. And then I'm looking for a break higher, goes into 35, pushes 36.75. The current stop for, stops are account size, product size, and time frame based, right? You have to have those three pieces at a minimum to figure out what your stop size is. I can't come in here and say I'm just going to use a 2-tick stop because that's what I like. It has to be based on statistical metrics. So we push into the 35, and then we start to roll over. And what happens, and that's scenario 1. Here it is again, scenario 1 into 35. Okay, and then what happens next is, interestingly, we get that Gilead news, and what does it do? It pushes right back into the next key area outlined down here, the 89. Remember this? The 89. So we got scenario 1 early, and then we got scenario 2. And so the Gilead news, it's a news-based event, so it's very quick to the downside. And then we end up consolidating. And where do we go? We go right back to that high volume node, composite high volume node, and micro composite high volume point of control at 27.75. This is a pretty methodical, pretty orderly auction despite the craziness. Now, did I know that the news was coming? This move was very, very quick. In 3 bars, we dropped about, I think, 60 points. 3 1-minute bars, we dropped about 60 points. And we ended up consolidating, attempting to push higher, and then finishing in what was a neutral extreme down. This day is classified as neutral extreme down. There it is. We closed at the bottom of the range after breaking the IB high, breaking the IB low. We were not able to close neutral normal. We closed neutral extreme down. What do we expect when the market closes neutral extreme down after pushing higher? I don't have the time to wait for your answers, so I'm going to tell you. We expect the market to continue. The auction got disrupted here with the pit close. The pit closed right here at 3:15 Chicago time and 4:15 Central Eastern. The pit closed, but it did not find its buyers, and so what does it do? It is likely to continue lower, and the next price down would be that stock zone. Look at that stock zone, 27.56. The low is 55 and a quarter. Again, a continued orderliness to the auction before the bounce, and now we're higher on the session. So that's yesterday's playback. That took a while. It took 7-8 minutes, but I want to explain to you what's behind what's behind the movement, and to help you. The market is governed by randomness. The reason one of the key reasons this is hard, and it really takes a toll on people's psychology, and this is your holy grail here, one of the many holy grails I've shared over the years. The reason this is hard and it takes a toll on your psychology is because excuse me, one second, is because there's a huge random component to this. And so, just like with everything in life, whether it's law enforcement, military, or whatever, there's a huge random component. And as long as you plan for that random component, minimize its impact, meaning obey, put down and obey your stops and things like that, then over time, over a large sample of trades, we should be able to see our edge, in my opinion. And so, the randomness is the random effect is why we want to use a stop, and the randomness is what tears people down, is what breaks people down, because people believe that if I do an X amount of work, I get a Y amount of result. And this is turning into a trader wisdom session. I don't want it to, but this is an important component. You're dealing with randomness, and this is a business, this is an industry, this is an occupation career where the randomness is quantified through your P&L. And so that's what really kills people. And so deleveraging, risk control, all these things are very, very important components to what we're doing here. Is this all making sense? I'll stop talking about it, but this is important to know. So defining your plan, defining your risk, putting the trade on, the classic stuff that you've heard everybody from Jesse Livermore and reminiscences of a stock operator to some of the biggest traders in the world, to hedge fund managers. They're all saying the same things because it's the truth. It's just people have a hard time organizing this randomness into something that they can live with, because we are believe that when we do something, we should get something. Anyway, so that's that. Let's take a look at CT Bookmap. You can find this at ctbookmap.pro, of course. Looking at the heat map overnight, a nice underlying bid at 27.50 from the open. So here's this bid that comes in right at the open. This is automated. It's real. It is light. It did not go from red to orange to yellow to white to light blue to dark blue to black as price moved towards it. So that makes it, the heat map tells me how long it's been there, and it tells me whether or not it's real. Likely to be real. And you can see that given its location, the mid-century figure, it was real, and it sat there all night. The market got down to the overnight low, and it turned around and started to push to squeeze higher at 27.55 and a quarter, and started to squeeze higher. And we could see here that it's quite, we have a bid at 27.80, which is just below the the prior close. But overall, the market has been kind of drifting all night to the buy side, and there isn't anything really stable up here in terms of liquidity or action. Nothing really significant was achieved overnight, except that we moved quite a bit. We moved about 60 points, a little under 60 points, 56 points, and we've pushed back above the 2800 line. This is what's important. So in terms of liquidity, 28.20 above, 27.80 below. Everything in between is just random in case you're stalking areas in there. So what do we have for today? So we can wrap this up. What do we have for today? Oh, sorry, my computer's a little slow here. So today's plans, let's look at that for a minute. By the way, those of you who attended the webinar yesterday, Futures IO, just an outstanding number of attendees. Really well attended. I really appreciate your support for EdgeClear. Thanks for attending. We got through about half the questions, and so what we're going to do there to address everybody's questions about clearing commissions, the use of margins, and things like that in futures. We're going to do a separate video answering the rest of those questions. And of course, you're always welcome to go to edgeclear.com and hit the chat box at the bottom left, or to edgeclear.com/contact and ask questions there. So this morning, the primary scenario is we're opening in range in value. Yesterday was a pretty decent price discovery, but we do have a value area from 88, 27.88 half to 28.19. And we're opening in value, in range in value. We're opening up against this 28.08 area, which has played really well. The stock zone's been here a while. From back here, from here, that stock zone is remaining in place. I'm expecting it to chop around. I'm looking because the point of control is near the high. And by the way, I forgot to pull up the overnight session, but you can look that up. The expectation is it's likely to poke through into the 28.15. I'm looking for it to find resistance in the 28.20 area and then to turn back around and then move into this 27.95, 2800 and consolidate here. Barring news, I'm expecting a relatively quiet session today. I said that yesterday and we ended up getting, and I was completely wrong. I was completely wrong in that as soon as we opened, we went into this drive, this initiative drive, and I immediately issued a warning to shorts. But that's where we stand now. In terms of the secondary scenario, I'm looking for a test of the overnight high. I'm looking for it to stop and falter 28.15, move into the point of control, consolidate here for a little bit, and then retest that closing price yesterday. We did end up with an extreme, a neutral extreme down day, and that auction does not look complete to me. It does not seem complete. I'm looking for another test at 27.75, and then a push lower, only to balance out and finish the week at that 27.75 again. Where is that relative to? Yeah, so that's what I'm looking for here. The third scenario, in case we do get initiative or get an open test drive up, the third scenario is a push right into this 22 area, squeeze to 35 and push through. And if that's the case, then we are likely to drift into the 50 before we rest, and that's plenty of range given that we're going into the weekend. Remember, this is Friday, and we're likely to balance out into the weekend. Who knows what's going to be announced about this pandemic, and so there's likely to be some correction at the close. Does this make sense? Hopefully, I walked you through the process well enough here in the short time that I have to help you kind of formulate your own thing. Our goal is to have you formulate your own plan. Good luck, and I'll catch you. Hit the like button, by the way. It is like Friday, if you like. I'll catch you on Monday. Watch your risk today. It's coming into the weekend. Do not give away on any one trade more than you have to in order to see if your plan is correct. Good luck.